Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Pepe, seeing what's going on. Really just quickly, summarizing our review from yesterday. So if you missed the video yesterday, we were expecting the price to kind of stay within this range. This is the drawings from yesterday, and it's done fairly accurate there in that sense where it keeps trying to test these support and resistance zones, and it's inevitable for a breakout to occur one way or the other. Okay, now keep in mind when you're kind of range bound like this, some indicators not going to give you super great reliability, and so we're going to have to rely on some support and resistance levels, kind of just identify that. But either way, we'll make sure to take a look. And if you are new to the channel, keep in mind, not a financial advisor, love to teach people to trade. If you want to become a better trader, cryptocash.tech is a website, link down below. We do offer really awesome stuff here. In fact, we got a trading competition here through BitGet here recently that just kind of went live here, or is going live here in minutes. Correction, actually just went live a moment ago. Basically, we got two winners, one for profit and loss ratio and one for trading volume. And all you got to do is use my link to register to effectively be eligible for that. And that covers every future competition. Also, congrats to our community members for a nice 15% in a day and a half off Ethereum. It's pretty awesome to be able to get that kind of benefit there. So it's nice to be able to share that success here with you guys. So what we want to look at here with Pepe is a few things. We can jump into the daily, kind of identify one key factor in the fact that the money flow is going out, right? There's more money coming out than going in. That really just tells us that for the most part, we're seeing a lot more selling pressure than buying pressure because a lot of profits to be taken. Big surprise. Also, furthermore, we can see that we are trending above 50 on the RSI, which is perfect. I actually like to see a price range between 50 and 70 on the RSI because it's really kind of a positive sign there. Okay, so if we take that same sentiment and we look at the 4 hour, this is where things kind of get interesting, or I wouldn't say unfortunate, but it's pretty standard and par for the course, right? Because we've sold off pretty hard. We came down below 70 and 50 on the RSI. Okay. Now that we're below 50, which is a key level support or now turned resistance, we can expect that to hold the price action in place. In other words, the relative strength of the last 14 candlesticks tells us that we are kind of more oversold than overbought, which you would think logically that's a good thing, right? The price is going to go up from here. Not always. Without more money flowing into the market or this coin, you're not going to find that. And keep in mind, you got to recognize here, this is the proof that things are the way they are right now. Taking a look here at Pepe and Wojak, the two major meme coins right now, they're both struggling. They're both in the red where most everything else is in the green. Okay, so it goes to show that these coins are the first ones profits are the first ones to be taken, because what they're doing is they're selling their profits here, putting into Bitcoin. As Bitcoin increases, they will inevitably sell that, put it back into altcoins. There's this rinse and repeat type of action that happens in the back end. You don't see it, but it's a very common thing. So it's not surprising to see these coins struggling today and to be selling off when the inverse is occurring with traditional markets. Okay, and you can see that reflected here. If you look at the hourly, here. Bitcoin goes up and Pepe goes down. Okay, almost exactly like the same hour that Bitcoin goes up, Pepe did too, but it hit a strong resistance shelf and came back down. That tells us there's a lot of selling pressure there, that 0.236 Fibonacci retracement level at roughly 200,000. Okay, so keep in mind 200,000 is a tentative resistance. We are establishing lower highs as we speak, so until we break that trend, we're going to continue lower. Okay, keep in mind, you could say that you could argue the same thing back here as well, but for right now, we want to look in the last 24 hours to identify if there's a trend reversal. So far, it's looking okay, but not great. Okay, because again, on the 4 hour, we can see that we're hitting those resistance levels. The hourly, we're establishing lower highs and lower lows. To break this trend, to be able to break a descending trend, you have to do one of two things. You have to either break the trend upwards by breaking through this descending type of trend, so we can draw this out here and kind of see this lower high pattern, right? So we'll need to inevitably break up above that and close above that. That'd be one of the steps. That typically happens concurrent with higher lows. So if we can establish this next higher low, then we'll be in good shape to see the price come up and continue further. Okay, we need to establish higher lows first. That's the most important thing to be able to reverse a trend. It's not setting higher highs, it's setting higher lows first. Okay, that's usually the first step. Obviously, higher highs are nice, but a higher high doesn't mean anything if the next low is lower than the previous. Okay, I hope that doesn't confuse you, but generally speaking, the whole point is to have more buying pressure at certain levels, because right now we can see every time the price gets in this range, there's an instant sell-off. Okay, so in order to establish that, we need to build more volume as a higher low to bounce off these levels and to get us further upwards. If we take a look at the volume profile, we can see there's obviously a lot of volume in this range. Okay, this is a positive sign. If we zoom out, though, however, we can kind of look and see that there's a lot of other buying pressure, if you will, below the price point, but there's a pretty big gap here in this range, okay? So the range of 140 to 170 is kind of no man's land. The price hasn't spent much time there. Even though that's a support range, it's not a super strong support. So hypothetically, we lose this bottom here, we would have the price potentially follow all the way down to 140. Okay. Just kind of giving you a worst case scenario because I like to make sure we give better perspective on everything here. Now, better case scenario too, just say we were to break this trend line here, right, and we continue upwards, there's a good chance we're going to break through this trend. We'll consolidate the 1.618 area, so I'd say 250 is a better case scenario if we break through this resistance channel in the immediate future. Okay, so again, these are just strictly hypotheticals. These are Fibonacci retracement levels that are reversed to help you understand potential for breakout if we were to get through that resistance level, which right now is at about 213 is the strong resistance. That's where we're seeing that retested twice. You can see this here, double top effectively, where the price continues upwards and then down. The good news is if this is a traditional double top, we're inevitable for an uptrend from here, okay? Because we've established a floor level. But you got to keep in mind, the more likely we're more likely to break down if we continue to retest those levels too. Okay, so we're not like in the clear by any stretch. But again, still very much a positive sign, if you will. So the hourly we can disseminate is still bearish because we're establishing lower highs and lower lows. 4 hour, we're below the 50 on the RSI, simple moving averages as well. And generally speaking here, I'm willing to speculate we're still within the cloud or below it. Let's go ahead and double check that. So let's take a look. Let's go ahead and remove the fibs here just so you can kind of see this a little better. If you can see the cloud, it's pretty obvious. Here, I'll just remove this too. You can kind of see that we are well below the cloud. And it's pretty stark reality because of the fact that we came up so fast, so quick, and came down fairly quick as well. This cloud takes a while for it to average itself out. Okay, so the key takeaway here is that we're below the cloud. That's the most important resistance level. And if you see that kind of running concurrent with these Fibonacci retracement levels, you can see there's a lot of resistance in this area. Okay, so that resistance zone is also concurrent with the others here. So I hope that makes sense and I described this correctly for you. Go ahead and give us a like, follow, and retweet here on our homepage and essentially help us grow the Twitter. Greatly appreciate you joining me here. I look forward to working with you. Have a great rest of your day.